And shares of Instacart falling today, down in the red on a report from the Information saying the banks that underwrote the company's IPO see slower revenue growth and lower profits than it reported in the first half of the year. Stock also moving on a hold rating from Gordon Haskett, the analyst citing a number of headwinds for the grocery delivery company. So this one is another interesting story, Julie, because when they made their debut, there were some positives. It was a decent bottom line, right? A lot of tech companies, as we know, when they make their debut, they don't necessarily show that. But on the other hand, growth had slowed. And Instacart would say, well, listen, that's tough comps. That's macro headwinds like inflation. Analysts are saying that probably also is competition sneaking up on you, and Instacart has a lot of it.
It does have a lot of it. I mean, you have to wonder at what point are some of these companies that did come public wishing they hadn't? I mean, by the same token, Instacart presumably needed to tap the public markets to get access to capital here. So I don't know. I mean, if you look at how it's performed, it's got 4 holds on it so far.
Not a lot of enthusiasm.
No sells.
You also kind of wonder, to the extent that, we we were just talking to economists, the extent that you start getting nervous about what the consumer might be feeling, the jitters they start feeling, you would think it's possible, of course, if they start getting nervous, a grocery delivery app could be one of the first things to go.
It's expensive.
Yeah,
we
both tried it.
Delivered. I mean, I like grocery shopping myself. I'm one of those weird people who likes to go to the store
and pick
out stuff myself.
And
rather, you know. I like to go to the farmer's market. I went this weekend. It makes me very happy. I'm one of those. But but to your point, if people are cutting back, I think the question is when and whether we will see higher income consumers cut back and decide where to redeploy their money. So that's really the big question here. We've seen it on the lower end. The higher end is what would affect the likes of an Instacart. All right, let's take a look at some other movers here. We've got shares with Kellogg trading lower on the day. That's after the 117-year-old maker of Pringles and Frosted Flakes split into 2 companies. Things like Pringles, Pop-Tarts, Cheez-Its are going to operate under the Kellogg brand, which is going to retain the K ticker that has been Kellogg's. Cereals like Fruit Loops and Special K will operate under the name WK Kellogg. KLG is the ticker there on the New York Stock Exchange, which is for the founder of the company. I like Telenovela because it rhymes with telenovela. I don't know. I think that's
a good reason to buy.
I think it's kind of fun here.
It rhymes. It must be true.
But it is interesting that you were seeing this spinoff here. And our Brian Sazzi, who talked to the CEO of, I think now Telenovela today, also cited some analyst commentary from Jefferies. Wait, what am I saying? Kellanova? I'm saying it wrong.
Sounded right to me.
Because I'm saying telenovela. It's
fine
Kellanova, not Kellanova. Whoops. All right. Anyway, so the analyst over at Jefferies is saying that they're not necessarily that excited, I think, about the...
Well, the strategy, I guess, is we're going to spin off the cereals. We're going to spin off the Frosted Flakes and the Fruit Loops, which I love both. No foul there. But why? And I guess the idea is that once we do that performance, the business, that division will just perform better. And I guess I get it because in theory, so you're more focused, you're narrow, you're not going to be distracted by the Pringles anymore, the snacks. But it looks like at least investors initially here a little skeptical.
It seems that way. And then there's another spinoff I just wanted to quickly mention today. Danaher, the big tool and testing systems maker, is also doing a spinoff on a related note here. So Danaher is spinning off Veralto, which is its environmental and applied solutions segment. Hopefully I've said that one right. VLTO. It's faring a little bit better. That is the spinoff is. It's up about 0.5%. Danaher still down about 3.25% today. So a lot of attempts to unlock value here.
A lot of moves. And lastly, let's look at shares of Nvidia trading higher today. It's after Goldman Sachs added the stock to its conviction buy list. Goldman attributing the move to Nvidia's position within the AI race. Nice tack on there, 2%. Nvidia actually had a tougher September, but of course this one has been a rocket ship. It's still up more than 100% this year. And what analysts seem to like here, they point out the competitive moat, the broadening demand in the data center, and they think perhaps further buybacks. Of course, when we talk to Nvidia too, is when you look at that chart, no surprise. When you see that kind of chart, it has attracted a lot of competition too. That'll be fun to watch AMD, Intel, the big cloud computing giants, the Amazons and Googles, all also developing their own chips. So
they are developing
fight
their
to watch.
Chips. I mean, the price target on this is 605 because obviously we know that Nvidia has already had a lot of upside. It's already on a lot of buy lists across the street. Goldman putting it on its conviction buy list is just like a little cherry on top or a little further push.
We love it even more.
Yeah, I guess so. I mean, but when you've seen the stock go up 265% over the past year and then seeing that upside to 605, it again just emphasizes the view on the street that there's Nvidia and there's everyone else when it comes to AI.
Very good one. 95% of analysts covering this name still rated to buy here.